I'm Matt Bouchard here in Dallas for NAREIT's REIT World 2017. Joining me today is Owen Thomas, the CEO of Boston Properties. Owen, thanks so much for joining us.
Pleasure to be here, Matt, once again.
Now, Boston Properties was featured in a recent article in our REIT magazine about mixed-use development. In your opinion, how have you seen these projects received by your investors?
Yeah, well, let me before I answer that, let me talk about honestly, what's equally important is how is it received by the customers? Because, why are we building mixed-use developments? Increasingly we're finding our customers want to live in 24-hour or extended hour environments. And so we are increasingly seeing demand for properties that have all different kinds of uses. So obviously, traditionally we're an office company, but increasingly we are able to develop residential with some proximity, and of course retail. Particularly service retail is very important in terms of creating these extended environments. So that's what's driving it, is the tenant demand. And so then the question is, it comes to your question, which is, how are they received by our investors? And I think very well. I mean, the key is we have to be successful with them. Have we leased them well? Are we making money on them? Are they well received? And so far, the projects that we built, have been. The other question for us as an office company is, are you becoming something else? And retail continues to be 7 or 8% of the company. The apartments are less than 1%, although that's going to grow a little bit. So still, so far, we're primarily an office company, and we haven't diversified such that it's a large percentage of our activity.
Now, with 2018 right around the corner, what do you see as the biggest challenge for Boston Properties?
We have a plan to grow our net operating income between basically around a year ago and 2020 by 25%, so which is very significant. And accomplishing that goal is the most important thing that we're doing right now, and it's got two components. One is development, and about 2/3 of the growth that we are going to experience is coming from the delivery of several new developments. And they are in the aggregate about 75% leased. So we need to finish the construction of these projects on time and on budget, and we've got to complete the remaining leasing. And some of these are very major projects. So for example, the Salesforce Tower in San Francisco is one of those projects that we're going to be delivering next year. So that's 2/3 of the growth. And then 1/3 of the growth is we are going to be leasing up our portfolio from 90 to 93%. And there are 9 assets that we're leasing up right now that we either bought, under leased, or they've experienced some rollover. And we're about halfway through leasing up those buildings to accomplish the goal. So to come back to your question, on 18, we need to do some important leasing and obviously complete those developments and make great progress towards this significant growth target that we have for 2020.
Now, obviously, every market is its own story. But as you look broadly at the office market, how do you see the supply-demand balance right now?
It's a little different by market, but overall, I would say in the U.S., the market is in equilibrium. So generally, quarter by quarter, the net absorption is more or less equal to the new deliveries that are going on, and so the market's in, again, in equilibrium. So vacancy rates are basically flat. To dig into that a little bit more, on the demand side is healthy. Virtually all of the job growth since the Great Recession has been in the technology area, and so most of the growth that we're seeing has been in tech-oriented markets. So San Francisco, parts of Boston, West LA, parts of New York. That's where the strongest demand is. And then on the supply side, that's also not equal. Again, as I mentioned, there is equilibrium. I think there is a lot of supply and new development discipline in the market. But several of our cities have had some secular changes that have created some large development districts. And I call them secular, not cyclical, because these have been in design progress and formulation for many years. So for example, we have the Hudson Yards in New York, which is a whole new district of the city. I would describe the Seaport District like that in Boston, and then the whole Trans-Bay District, which has created a number of development sites. But again, overall, market's healthy and in equilibrium.
Owen, thank you so much for joining us.
My pleasure, Matt.
For more from REIT World 2017, be sure to visit NAREIT's website, REIT.com.